welcome to this video. It's the Sunday market outlook. We're gonna go over what I am expecting for the week. Then after that we will do a Q&A. I'll answer any questions that you guys have, and also I will check on the Discord any questions that you guys have. So let's get into it. On DXY, the weekly, we have obviously taken out this high here, and then not last week, the week before, we have also taken out this high. So essentially it's a double sweep, but we still do have this weekly fair value gap that price can potentially use to go higher. So I am looking for DXY sales to begin with, because of the double sweep we've had up here, and this will also be clearer on the daily time frame, because on the daily time frame we have now closed below this daily fair value gap, as you can all clearly see. And on Friday we obviously took out Thursday's high and had quite a nice bearish closure. So my first draw on liquidity will be here, and then after that I'm unsure what price may do, because we could easily get something like this to go up higher. Because if we go back to the weekly, and I'll get rid of this drawing just for example, this is a weekly week low, and after that weekly week low we also have a bullish propulsion block that we are yet to tap into. So why is this a bullish propulsion block? We had a stop run, we traded up higher, we had down close candle, we traded above the down close candle, down close candle traded into the order block, we then closed above the down close candle, which then makes this a propulsion block. So yes, you've probably all seen a lot of other people's outlooks. We've had the sweeps of the highs, but only because we've had the sweeps of the high. The sweep of the high can just lead to a pullback, because we have two pretty big PDRAs to get through before we can fully say DXY is bearish back down to this low. We have a weekly fair value gap and a propulsion block. So this week could easily open up, trade lower, we get a low of the week around Tuesday, Wednesday, Thursday, then trade up higher going into the rest of the year into this high. It is completely possible. And I'm hoping as well this month we get quite a nice move, whether that is downside or to the upside, because last month we essentially had a consolidation because the monthly candle closed as a doji. So I'm hoping we do get some nice movement simply because of that reason, because last month was purely a consolidation month. But if we go back to the daily, like I mentioned, the first bias for the week is these lows, and I don't expect us to come back to this daily fair value gap here, and I'll explain why. Because we've already tapped this inverse fair value gap, and if we go to the 4 hour, we have traded already into this 4 hour fair value gap here, and we have also traded into this 4 hour fair value gap here. So we've essentially done what we needed to do in these two areas, and the daily fair value gaps around this level. So to me personally, it wouldn't make sense to invert this 4 hour bearish fair value gap, close above this high, close above this high, hit the daily fair value gap, then go lower. And if we also go down to the 1 hour, what I am expecting, this is my main thought for the week so far. Obviously on Friday we had a stop run inside the 4 hour fair value gap plus the daily inverse fair value gap. We have this new day opening gap here. So let's just get rid of some of these drawings to clear it up a little bit. So yeah, we do have this new day opening gap here. So I am expecting us not to close back above that new day opening gap, because as you can see, we traded into it here and basically used it as support. We traded away from it. Now we traded through it. I essentially want to use it as resistance in basic terms. And if we do close above this, we also close above this 1 hour fair value gap that we have. So I want to see these two levels be respected and go lower. However, we don't actually need to trade back into this 1 hour fair value gap, because if we take a look at EU, DXY has already traded into the 1 hour fair value gap. EU hasn't. So from now, we could easily now just go from here very, very easily, because we do have this 1 hour inverse fair value gap here. So if we go to, that brings us on to EU on the daily time frame. Obviously last week we respected this BPR down here and we traded away from it. We also disrespected this bearish fair value gap, creating an inverse fair value gap, and on Friday you can see we closed into this perfectly. And on the 4 hour we had a stop run of this low here. We have now created an order block and we do have this 4 hour fair value gap. But like I just mentioned, I'm not expecting a deep retracement. If anything, I wouldn't be surprised if we leave this 4 hour fair value gap opened. Not saying that it will, but I wouldn't be surprised at all, simply because we've had a stop run, but we've not really had a major expansion after the stop run. Like, we failed to even get above the previous day high after expansion. So like I just mentioned, this could easily be left open and we just go from here. But I won't be trading EU tomorrow. Why? If we look on the daily time frame, what do we have? We have 1, 2, 3, 4, 5 bullish daily candles in a row. So if we go off the low probability filters, what is the first one? 3 to 4 consecutive candles in a row is low probability. So in an ideal world, tomorrow we maybe push up a little bit, we chop around a bit and then push up higher, or we could get a push up higher. And if we look on the weekly on EU, this is still a weekly bearish propulsion block. Obviously we have tapped into it once, we moved away, but we could easily run out this high here, close back below 50% of this bearish propulsion block and then trade lower. That is a very big possibility that we have to take into consideration going into tomorrow. Sorry, 2 seconds ago. Emily! Sorry about that, everyone. But yeah, so we could have a stop run of this high and go lower. But like I mentioned, my bias to begin with is these two highs here. And then after that, we will go from there. So that brings us to GPUSD. GPUSD, same thing. We obviously had a stop run of this low here. We then traded up higher, closing above. We are now inside this daily fair value gap. So what I would like to see now on GU is if we can get a closure above this, we can use this as an inversion level, which can then take us up to this rejection block up here. That would be the ideal situation for me on GU. And on the 1 hour, as you can see, currently we are struggling to close through this 1 hour fair value gap. So get above that, retest, hopefully a daily close above as well, retest into the inverse fair value gap, and then we can see if a trade develops from there. This is all dependent obviously on what DXY does, because by then DXY could have traded into this low and we could see a reaction and a potential reversal, or we could trade up and completely be wrong and just trade higher, and this could be the stop run into the weekly fair value gap. So we're not going to be just focused on one bias. Yes, my bias is short, but you have to be open to the other side, because if you're closed-minded, you're not able to adapt to what the market presents to you. But looking at USD CAD as well, obviously we had a very bearish, if we just get rid of these drawings, we had a bearish week last week. We have also made a weekly bearish order block on USD CAD. Otherwise that's going to be massive. And then if we go to the daily, obviously price may not trade up all the way into the weekly order block. However, if we do create a daily fair value gap here, we can look from the daily fair value gap / the weekly order block for sells. Also, depending on what DXY has done at that point, because this could potentially be a stop run. Because if we just look at candle closures, remember I tell you guys, when we take out a low, the best confirmation you can have is we close below that low. And the way USD CAD didn't close below this low is a bit sus in my opinion, because this could easily just be a stop run and then we go back for these equal highs or relative equal highs up here. But you won't be looking to sell this anyway on Monday, because we've had 1, 2, 3, 4 expansion days in a row. So yeah, that is basically my bias for this week to begin with. Well, especially for the first half of the week. Like I said, it can easily change if we take out this low and then afterwards we form some bullish structure. But yeah, I don't think there's much else to cover. UJ looks a bit awful right now. Obviously we do have this daily bearish propulsion block, so if that gets closed above, we can invert that and go higher. If we take a look at bonds are going the opposite direction. The Friday candle closure, so all three bonds, Friday bearish, Friday bearish, Friday bearish, and then if we look at EU, bullish. Yeah, interesting. Obviously, I don't look at bonds like that much, but they're more of something you look at in New York session than anything else. But the daily closures are quite telling, especially how we've come above this high and come back below it. So yeah, we'll see how we are trading going into Tuesday. I'm personally not going to be trading tomorrow, simply because EU's overextended, USD CAD overextended for me. GU, I want to see a closure above this inverse fair value gap, then use it as an inversion level. And yeah, they're the 4 pairs we're going to be focusing on now. And I will have another video out tonight / tomorrow morning about something very important that you guys should all be doing as well. Euro pound, obviously we have took this low here, but we are struggled to close back inside the range, so this could continue bearish, meaning pound will be stronger. If we take a look at the weekly, we are inside a weekly fair value gap as well, so euro pound could do anything. Honestly, I'm not that good at reading this pair, because whenever I seem to make a bias of some sort on it, it just doesn't go how I plan it to go. So it's a super hard pair to analyse. If you guys can analyse it, then fair enough. But me personally, I'm not the best at it. So yeah, I always keep an eye on this just on the daily to see what we're doing, but I don't like look at it and put my life on it sort of thing. So yeah, that's the bias to begin with. Bullish EU, bullish GU, bearish USD CAD, bearish DXY, but that can soon change simply because of the factors we have outlined. Right, let's see what questions, if there is any. I might think we'll be avoiding trades tomorrow as it's Monday. Yes, avoiding Monday, and it's no FOMC. And the video I'm gonna make after this or tomorrow morning will also cover why Mondays aren't great for me. It looks high probability. Yeah, it looks good, high probability, but like I just mentioned, we are a little bit overextended on the daily on certain pairs. So for me personally, I want to avoid it. Gold, I can take a quick look at gold. Let's see where we're at with gold. So gold, we look on the weekly time frame. So obviously this looks like a internal to external play going on, but you have to be cautious of this weekly rejection block, because now we have closed above the daily fair value gap. We used it as an inversion level on Thursday. Obviously Friday expanded, so because Friday is expanded, I'd expect Monday to be a lower probability day. Obviously I assume the first target here for me personally would be this Thursday the 13th of November high, and then after that anything can happen, because this could be a stop run into this order block / weekly rejection block, then go lower. But then you also have to take into consideration we are basically trading near all-time highs, so it can easily go to 4,500 before end of the year easily. So if we take a 4 hour, it's sort of just been like a grind up really, hasn't it? It's not really displaced. That there's not a single fair value gap since last Monday. Well, sorry, there's one here on Tuesday, but we've sort of just grinded up. Obviously we had the massive wicks on Friday. I don't know if you guys, from that CME thing, nothing like these wouldn't normally happen if it weren't for that CME thing. Yeah, I'd definitely say after this high, I'm not actually sure, but yeah, gold isn't my focus as such. I'd just be focusing on majors for me personally. What do you think about the importance of making strategy? When you say mechanical, I always get confused. Mechanical is like anyone in the world can follow it, right? And then discretionary is like the human input side to it. I'm pretty sure that's right. Important. Yeah, obviously you can make a strategy mechanical to a certain extent, but then also you have to have the variables of like low probability rules, whether like a session's overextended. Like you can't really, that's sort of down to a person to say the session's overextended or it's not, because someone might say a session's overextended at 30 pips, but then another person might be like, well no, I think 50 pips is an overextended session, sorry. So I do have mechanical parts to my strategy, like we have to have a daily or 4 hour key level, a stop run, and then a 1 hour or a 15-minute change in order flow, then look for like an hour order block. So like them parts of my strategy are mechanical because they look exactly the same every trade we take. And if you go over all the videos in all the recordings, majority of our setups look exactly the same. Stop run into a hard time frame key level, then mainly a 1 hour order block form or a propulsion block, and then displacement away. So that side of the strategy is mechanical, but then there's other parts like I just mentioned, like low probability filters. Obviously people look at PD rays differently. You have that side of it, like I just mentioned about the sessions being overextended. Obviously the risk to reward that's not mechanical, that's sort of like I just pick targets where I think price is going to go to, whereas someone else might say, oh, it's going to go further, it's not going to go as much. So there is parts of it that are mechanical, but I'd probably say majority of it is discretionary, simply because you have to like sort a daily bias and all the other stuff I just mentioned. Do you believe in edge decay? Strategy is working? Personally, no, because you always have to evolve in trading. For example, I've learned a lot this year about what works best for me, and that is from me journaling. But you only learn from journaling, because if you don't journal, you have nothing to look back on. You don't know what's working well, what sessions are best for you, whether you look like continuation trades or reversal trades, or are you better at holding trades for longer? So edge decay, personally, I don't believe in, but I do believe in you have to tweak and adapt your strategy each year to make it better for the next year. And you can also better yourself for the next year. So you have to, if you don't do that, then yes, your strategy may not work, because eventually, if you keep doing the same thing over and over, you can't expect different results. For example, you might have heard the quote, it's something like, what is it? If you do something over and over but accept the same results, that's like the purest form of being an idiot or something like that. You can't do if you're doing something and it's not giving you results, don't keep doing it and expect a different outcome. So if you keep adapting your strategy, you're going to get a different outcome. And each year you should adapt your strategy to get a better outcome each year and each year. That's why a lot of times you see people become profitable on their 4th, 5th, 6th year. Like for me, it was my 4.5 years in before I became profitable, because obviously in the beginning you learn about like your trading, what style suits you, all that sort of stuff. And then like this year I've learned so much from journaling and seeing whether continuation trades are better for me, whether reversal trades are better for me. So yeah, I don't believe in edge decay, but I believe you have to evolve your strategy each year. Any exotics? What exotics are you guys looking at? GJ? Just GJs? All you guys looking for? Is there any others? Do you think it's better to only focus on one pair like EU, or is it better to look for setups in all majors? I personally wouldn't say just EU. I'd probably say 1 to 3 pairs is your bet. If I had to tell you guys only trade these pairs, EU, GU and USD CAD, until you're comfortable with doing other pairs. Why? Because obviously EU and GU correlate with each other, and USD CAD moves quite nicely anyway. Like if we look at a USD CAD chart, as you can see, it moves quite nicely. Obviously there is consolidation periods, but every pair consolidates, but we do have quite nice movements on it compared to, if we look at UJ, we have consolidation, a bit of expansion. Like to me personally, I think UCAD's way cleaner than USD JPY. So if you wanted me to say only focus on 3 pairs, I'd definitely say them 3. I wouldn't say focus on only one pair, because if you only focus on one pair, I feel like you can force trades just for the sake of it. Whereas if you look across 3 pairs and you don't see a trade, that's probably a very high sign that, okay, there's not a trade for a dollar pair. But if you just focus on EU, say you're looking for Euro USD to buy, but then like Euro pound is selling, that means that you're going to miss out the move on Euro USD because Euro pound's selling, but you'll be thinking, oh, like, what's going on, sort of thing. So I'd definitely say focus on 1 to 3 pairs, if anything. GJ, right, let's have a look at GJ. Oh. So we do have this high here to begin with. And to me, that obviously looks like the drawn liquidity. We do have a weekly fair value gap here. Obviously last week we traded up higher. We are in a daily fair value gap here. So what I would be expecting on GJ, if we hold this daily fair value gap, if we go to the 1 hour, we have had a stop run of this low now. If we can get above, let's have a look on the 4 hour. If we can potentially do something like this, run this week low here, get back above this 1 hour fair value gap, use it as an inversion level, and then trade up higher into the 208 region. That would probably be my play. But if we close below this daily fair value gap, I can see us going a little bit lower. We could potentially go to the weekly fair value gap that I mentioned. So yeah, that would be the play for GBP for me. Obviously we do have a small 4 hour BPR here. So yeah, run of this 1 hour low, then potentially trade higher. But if we do come back to this low and trade below the daily fair value gap, we could return to some of these lows before returning higher. That would be my bias for GJ if you guys were looking to trade it. Let's see if Euro JPY, how that looks. Looks like Euro JPY is a stronger pair, but the daily framework isn't nowhere near as nice. Is this all-time highs as well? Oh yeah, and it's all-time highs for Euro JPY. So me personally, I would probably avoid this. Obviously GBP JPY we do have a bit better framework, but because Euro JPY is at all-time highs, anything can happen. As you can see, as you've seen with gold, we could just dump here, because I know that when JPY gets to a certain level, the banks in China like intervene or something and just like basically pull back the yen, if that makes sense. Like out of nowhere, it will just drop, and like USD JPY will just drop like 200 pips within a minute. I think it's called like bank intervention or something like that. Yeah, they'll just, especially near this 158 level on UJ, I know that's a level that I've seen in the past and seen a lot about on X. So just be careful trading JPY pairs at the minute, because especially because they're all-time highs, this means that JPYs are all-time lows or near all-time lows. So instantly they could do something just to try and recover the currency a little bit. But yeah, if anything, GJ longs into the monthly high. Obviously first target would be previous week's high and then go from there. Any other questions? What is your opinion about reducing risk when you're in drawdown? Yes. In the Discord, I'm pretty sure there's a section where I speak about this. The way, if you want to be like super strict and like you probably never want to lose a funded account, what you can do is risk 1% until you're 3% in drawdown, and then drop to 0.7%. And then if you drop down to 0.5%, then drop down to 0.5% risk. But then say you take a win and you get back up to 3% down, then up your risk back to 0.7% until you're back out of drawdown, then you can risk 1%. That's probably the way I would advise people to trade prop firms, especially if it's an account like you don't really want to lose, or if you can't afford to buy another one or anything like that. But if you can afford to purchase another one, I would suggest personally just 1% risk, because prop firms are something there like you want to make money from. Like me personally, I don't want to be in drawdown for months and months trying to get out on 0.5% risk. But I also understand other people's financial situation, that if you can't get another account, that's what I would advise. The 1% till you're 3% down. After you're 3% down, 0.7% risk until you're 5% down. And if you're 5% down, do 0.5% risk. Because then I think it works out you have like 22 trades or something like that until you basically blow the account. Will you trade in GP or no? I will not be trading any exotics anymore, especially not for the rest of this year, until I build a bit of confidence back and we can hopefully recover some of this drawdown. There's no exotics for me. Am I recording this? Yes. All the live streams we do are recorded. If a strategy is working on a pair, should it be working on other pairs? That's quite a good question. I would have thought so, yes, because you're trading the markets and all the markets are moving the same. Like if you wanted to look at crypto markets, obviously not altcoins, but like the major ones like Bitcoin, Ethereum, yes, like propulsion blocks work, all that sort of stuff. So yeah, it should work across all pairs, but I just know the way I trade works best on USD major currency pairs out of all of the possible pairs you can possibly trade. But I've also had some people tell me that my strategy not my strategy, but the way I trade works quite well on futures like NAS, US30, stuff like that. So it's more about you have to test it for yourself first before you start going to put on proper risk. When am I planning to stop trading for the year? The date I'm going to stop is, I think it's Friday the 19th. Let me just have a look. Yeah, Friday the 19th. So 3 trading weeks left. Yeah, this week, next week, and the week after. And then obviously after that, the following week's the 22nd. And me personally, I just want to have like a week or so off. Obviously it's Christmas, enjoy time with your family. At the end of the day, there's more important things than the charts. Why haven't you tried future prop firms? Simply because I just haven't. There's no reason why I haven't. Maybe next year I'll give them a go, but for now I'm happy trading Forex prop firms. You can make so much money on Forex prop firms. I've also looked into some of the rules, and I don't like the trailing drawdown rules. Obviously, if I do go to try it, I'll have to accept the trailing drawdown rules, but for me personally, I don't want to do that at the minute. But maybe next year we can try it as a group or something like that. As for gold, even though we're about 300 pips in profit, isn't it good in that case to go break even instead of? Yes, obviously though, that's all relative, because if gold has been trading in a big range, 200-300 pips may not be that much. So it's alright saying, oh, you can be up 200-300 pips, but you only move to break even when it makes sense to move to break even. That's where having a set of rules like I move to break even after taking out a short-term objective, that's where your rules kick in. So when you enter a trade, your stop loss, take profit, and your break-even levels should all be planned out before you enter the trade. you shouldn't be making up depending on how much money you're up, if that makes sense. Yeah, I'm going to trade the QT account. I might as well give it a go. It was a good deal on Black Friday, so I'll give it a go. Let's just check the questions tab. Can you all see the Discord chat? Could you just let me know in the chat, please? Yeah, you can see the Discord chat. So, just wanted to go over these trades. So gold is from the 26th of November at 10 a.m. UK time. th of November, 10 a.m. UK time. So here, I looked earlier, they class this as a propulsion block. So why did this trade not work out? Obviously, you're correct with the bias. The bias is correct. You can clearly see it's bullish order flow. This is your order block here. Because we've had a stop run of this low. So yes, this is a propulsion block, because obviously you can see we tapped into the order block after a stop run. However, this is a 1 hour week low. So as you can see, price did take the 1 hour week low. The best propulsion blocks that form are when we have an order block and the propulsion blocks form near enough instantly. And then when you enter on the propulsion block, you can put your stop loss near the 1 hour low of the order block. But obviously in this situation, you're not going to do this, because even all the way up here is not even a 1.84R. And obviously the rules are when you close below 50% of a propulsion block, you close the trade. So yeah, it was a good trade, but because the propulsion block lows not even that close to near the 1 hour strong low, there's always the chance that you can run out the 1 hour weak low, which is the propulsion block, and then go up higher on that one. On or JPY, Thursday the 27th of November. At 8 a.m. UK time. Is that right? Yeah, so this trade here, this is a literally fine trade. You've put your stop loss to break even because you've hit the 4 hour rejection block, and this is one of them trades where there's nothing you can do about it. Like it's just part of the game. You've had the propulsion block, you've got the key level here, you've moved stops at an appropriate level. The only thing you maybe could have done better is took off, say, 30% of the trade just to cover, to make sure you get a little bit of profit and leave the rest of the runner. That just happens sometimes on trades like this. GJ, I went over this one earlier by myself. 25th of November at 8 a.m. UK time. Yeah, so what I noticed here was, obviously you said that SMT was here, but what you had to look out for was, yes, we did have SMT and we had a nice bullish closure, but the bullish closure was just into this 1 hour fair value gap. So yes, you can say that SMT is confirmed because we closed below these down candles, but for essentially as a double confirmation, you just have to be aware of the opposing side. And what you ideally would have waited for, obviously this was during London, so you could just wait and see how we trade during London, and then if we get a closure above during London, going into New York, you can look for a continuation off this inverse level. Because as you obviously seen in the trade, we traded into it and then traded lower. So that's personally the advice I would give on that one. if you want to be like, that's where you have to sort of be a bit more patient, especially because it's quite early in the day. That's something I've found as well. You're better off waiting for that double confirmation, especially if it's a London session trade, and then you can always just catch the move during New York, because then obviously during New York it did go up. USD JPY. I've done this Monday the 24th at 9 AM UK time. So yeah, this one here, if we put it in replay mode, you had the correct, like marked everything out properly. The setup was a good setup. You had a stop run into a daily fair value gap. You had the propulsion block form. This is just a simple, you can manage the trade a bit better, because we obviously traded up. So that's here and that's here. So we obviously, yeah, so this is what we have, this 4 hour fair value gap here that's basically against your trade. And yes, we had a nice initial reaction, we pushed up higher, but we had a stop run of this high here. We had an order block afterwards. Let's do red to make it clearer. Then after that, we traded into the order block, then traded lower, creating a propulsion block. So as soon as you see this propulsion block form here, so instead of losing 34 pips, just close at -5 pips. So that one is more about risk management. So they're all quite good trades actually. All 4 of them are pretty good trades. You've got everything there. Obviously this one, just be careful of the weak low like we mentioned. This one was again trade management. Like you can't, that was good trade management. You can't do anything about it. It just happens. This one, maybe just wait for the double confirmation and then New York session. Then obviously this one again, just trade management from what you see at the end of the day after the propulsion blocks formed. So yeah, I'm happy to see that. They're all good trades. Any more questions? What is the risk management you use with Darwin X? It's the same. I've been trading gold on it. I've made a video about this in the Discord. If you go to the daily charts, where is it? I did make a video somewhere of, this video here, honest talk about my Darwin X on the 18th of November. So if you go and watch that video, you'll be able to basically see what I explained. Are you planning on keeping funded 1% risk? Yeah, I'm going to just keep 1% risk. I'm happy to do that. I'm not going to trade all my accounts at exactly the same time though. I'm just going to try to get one out of drawdown at a time, because then otherwise I could lose them all in a row, and I don't want to lose them all. Yeah, so yeah, just the same for that question. Basically, just you can trade each account separately, or you can just trade them all at the same time. Obviously, if you trade them all at the same time, there's the risk that you're going to lose them all at the same time, but then you could also get them all out of drawdown at the same time. So it's sort of like, which one do you want? That's something you guys can only make the decision for yourself. If you guys are happy with losing the account and starting over again, then obviously just trade them all 1%. But if you don't want to lose your accounts all in one go, you can maybe say you have 4 accounts, trade 2, try and get them out of drawdown, then if you don't get them to out of drawdown, you still have 2 more to try and get yourself out of drawdown. Yeah, protect one account with dear life and risk on the others. Yeah, don't just risk all on one. Yeah, so there's so many ways you can get yourself out of drawdown. It's more of a personal preference. What you guys can tolerate when you're in drawdown. Like, you just have to, it's more about making a plan and sticking to the plan. It's like having a strategy in trading. You've got to create a strategy and just stick to the strategy. Same when you're in drawdown, just create a strategy for getting yourself out of drawdown and then just follow it. No matter what anyone else says, if it works for you, like I've mentioned in the previous video, you have to make trading work for you and your personality. If you can do that, then that's all that matters. So yeah, if you're ever in drawdown, just write out a plan, what you're going to do, and just follow the plan, whether that's 0.5, 0.7, if you want to drop to 0.25. You just have to do what works for you. Guess what? It's just best to get a personal account to juice them and trade that mainly. Yeah, personal accounts, obviously, they are good, but you have to remember it's your money. Say you put 100k into a personal account, that personal account, if you go on a tilt one day, there's no one stopping you from blowing that 100k within 10 minutes. So there is benefits. Obviously, you don't have all the bullshit rules about news rules. There's no one stopping you with withdrawals, all that sort of stuff. They are benefits of a personal account, but you have to have a really good psychology to be able to trade a personal account to be able to trade it full time, because one slip up, that account can be gone, because like I said, there's no one to stop you. And we've all been on tilts before, you only end up stopping after you hit the drawdown limit. Until you hit the drawdown limit, you just think, oh, I'm going to get this account out of drawdown when you're revenge trading. But when there's no drawdown limit, apart from when your account hits 0, you've got to be really self-responsible and know what you're doing to trade a big personal account. So Tom, his psychology is more developed. I find it impressive. Yeah, I think that's just years of losing, to be honest. I think that's all it is. I've just built up the psychology over the years to be able to handle a 1% trade, well, risking 1% per trade. But like I mentioned before, this is all about personal preference. So I think that's it for today. I don't have anything else to cover in the market prep. I'll probably do maybe another live stream, maybe Wednesday night, just for like a midweek sort of, we can do a midweek rest of the week outlook sort of thing, just so we're all on the same page. And it's better to have more interactive sessions. I think I like having these interactive sessions with you guys, and I hope you guys are liking them as well. But I will speak to you guys all tomorrow. Have a good rest of your weekend, what's the rest of it, and we'll see what we can do this month. And yeah, I'll speak to you all tomorrow. Thank you.